Just going to give it a few minutes, see who else joins us. All right, well, good afternoon. It is 1:07 p.m. Mountain Time, and this is Paul with Canopy Mortgage. We're just going to be discussing the Federal Reserve rate cut. So, as you probably heard, the announcements have gone out. The Fed Chair Powell had his end of meeting announcement today at noon Eastern Time. They did agree upon a very hawkish rate cut of 25 basis points. And what that means is the vision for this rate cut is to preserve current market inflation levels. That's why it's not what we would call a dovish rate cut, which would be something that would be pretty dramatic, 50, 75, even 100 basis points. Keeping in mind that this is on overnight lending, that banks lend funds to one another. So how does this translate and trickle down into the residential mortgage markets? It's not a surprise. This is a meaningful signal. The Fed stepped in and the data showed enough easing in inflation pressures just to justify taking their foot off of the brake just a little bit, but honestly, just barely. It's not a mission accomplished moment. It's just a strategic adjustment and to keep pace with their previous actions. So what's it mean for mortgage rates? It's important to remember that this does not move in lockstep with the Fed funds rate. They move with expectations, future inflation, future growth, and how confident markets feel overall as a whole. And the expectations are future inflation, future growth, and how confident they feel about that direction. A cut helps stabilize the sentiment, and we are already seeing modest improvement in pricing as bond market prices get a little bit more soft, but incrementally. This is not just a huge free fall. So, bigger picture, this is the end of Powell's reign as Fed chair. His term expires in May. He's expected to be replaced. This means this is likely the last policy shift under his leadership. They do have multiple meetings between now and the end of his term in May. However, all realistic expectations are things will stay as a constant for the remaining portion of his term. The next move, even if there is one, would be depending on who the incoming leadership is, how they interpret the data. Big thing is the jobs numbers. They're out, but they're not whole, they're not complete, and they're certainly not something that has been analyzed down to the finer detail level that they had been in the past, and that's because the lights just came back on that office on November 1st. The next move, we'll have to see who the actual incoming Fed chair winds up being. We could see a little bit of a dovish tilt on the outset, meaning more aggressive rate cuts, but no one is going out on a limb yet to say which direction we're headed. Everything hinges on the same financial trifecta: the PCE, personal consumption expenditure, inflation numbers, broader inflation indicators, jobs numbers, and labor market cooling. Until they show consistent, sustained improvement, the Fed's going to stay in risk management mode. So this cut is directional, but it is not definitive. What does this mean for home buyers and homeowners? This is a strategic optionality. Opportunities are opening, but you have to time them well, and that means working side by side with an experienced mortgage professional so that your personal scenario rather fits into the broader cycle of these rate cycles. If you want to clarify where you are or get some clarity to what direction you're heading in, or even just plan ahead, reach out. We'll walk you through the plan and be happy to give it to you in plain language and come up with your personal financial blueprint, your personal financial roadmap to see how things go. If you want to send us any questions, you can go ahead and reply to the email and the address below, or click the subscribe button. We do our weekly market updates on Mondays, and then an end of the week, usually on Fridays, with some content in between on Wednesdays. So there's a question in the chat, and let's see here. So I have a home I purchased 2 years ago. My rate is 7.625% on a conventional loan. What are your thoughts on rate cuts? My thoughts are you probably should be working with your mortgage professional already, um, because that 7.625 on a conventional is something I've already overcome personally with a few clients, and we could likely see that rate below 6% depending on what your individual financial scenario is. So certainly reach out to your trusted mortgage professional or drop me an email and we can discuss your personal scenario. I don't know why the chat's not popping up for everybody, but another question also asking about rate cuts and what does this mean for me. If anybody's looking for personal scenarios, feel free to reach out to your mortgage professional. If you don't have somebody and you just want to chat, go ahead and drop me a line. We can go ahead and discuss that. But again, this is a very hawkish response by the Fed, 25 basis points in June, July, and August. The mortgage industry had already predicted that September rate cut at the same amount, and they started to lower their numbers incrementally so their bottom lines weren't hit all at once in September. All great questions. We'll fill in the blanks and get some more information for you. We'll have more on the end of week update on Friday. We will be out next week. I'll still do my Monday Mortgage Minute, but we'll be out of the office from Wednesday through the following Monday. Go ahead, get your inquiries in via email. Let's see what we can find out. Or if you're in a state where I'm not licensed, I'd be happy to make a referral to a licensed professional that you could work with. Well, thanks, guys. Just wanted to chime in on the Fed cut and where we were heading. And if anybody has any questions, again, please feel free to reach out. Have a great day.